In this video, we're going to look through the stock market, Forex, stocks, indices, commodities, and crypto. We're going to stack probabilities on whether the market is strengthening or weakening. To do that, we need to look through the Tier 1, Tier 2, and Tier 3 charts. We're going to be covering off a lot of ground, and we're looking for the institutional buy and sell levels. Let's run the numbers. The main markets in the last trading session were collectively down 0.57%. Best sector, energy, up 2.31%. The worst sector, information technology, down 1.75%. With the upcoming FOMC meeting, all eyes are on the federal funds rate. We can see that there's a 7% probability of an increase of 25 basis points to the federal funds rate. We know that all markets are intercorrelated and interdependent. That's Rule 446. All charts measure risk. This is the S&P 500 marked up with the CTKS method since 1871. The CTKS method is the world's most powerful smart money buy and sell level detection system. Levels marked up through the CTKS method are called Standfield Levels. They mark up all of price history, and in this case for the S&P 500, that's from 1871. We can see that there is an institutional sell level at 44.93 and 41 cents. There's an institutional buy level at 44.39 and 61, and several below that. The S&P 500 closed out at 44.61 and 91. Market behavior is very simple. Price is always moving SL to SL. If it can't get above, it's going below. But if it can get above, it's going to the next one. Stressless trading and investing just requires this rule, Rule 654. Prices move SL to SL, that is Standfield level to Standfield level. SLs collectively form CTKS structure, which is objective dynamic market structure. If a SL does not hold, it's going down to the next one. If it does hold, it's coming back to the previous one. Price is always moving SL to SL, and when we look at the Nasdaq, it closed out at 13,773.61. There's a smart money sell level above at 13,809 and a buy level below at 13,716. The fear gauge, the VIX, it's important because it shows us where smart money is stepping in to push price down. There's an inverse relationship between the VIX and the S&P 500, and we can see the VIX was heavily supported. When it's heavily supported, you get a clustering of SLs. Clustered SLs are stronger and they reverse price action, whether it be a support structure or a resistance structure. And you can already see that the pre-market is opening at 1439. Looking for clustered SLs or clustered Standfield levels is really important, and that is Rule 655. Knowing CTKS structure is incredibly important. If we don't know where the ceilings are, and we don't know where the floors are, and clustered SLs are stronger. Clustered SLs, either above price when price is coming up, act as an increasingly strong ceiling, or clustered SLs below act as support to rebound price. The DXY is currently 104.6840. When the DXY comes up, it throws pressure and momentum in the negative direction on stocks, commodities, and crypto. That's why it's very important to know where the DXY is going, and we can triangulate the DXY by looking at the Forex pair, the euro-dollar. The first thing we need to know, where is smart money buying and selling? We saw on the euro-dollar there was a smart money sell level at 107.60. Price came up and just was stopped dead in its tracks. This is the power of the CTKS method, and this chart has been marked up with Level 1 and Level 2 standard certification since 1971. If the price can't get above, it's going below, and that's exactly what we saw. It fell to 107.44. If we see dollar strength continue, we would expect the euro dollar to come down to 107.27. Now we're seeing a cluster of SLs. We would expect a technical bounce upwards at this stage. SLs give you something that indicators cannot give you. They predict where price is going. That is Rule 605. We would expect if the DXY is coming up to see the US 10-year yield and the US 2-year yield coming up as well. And here the CTKS method indicator has marked up this chart since 1912. We can see a band of clustered SLs on the US 10-year. The US 10-year is above that clustered SL band. We saw with the DXY, and we see this with price charts all the time. If price gets above a clustering of SLs like what we're seeing with the US 10-year yield, the probability is it's going to the next level up, which is at this 431.37 mark. The US 2-year and the US 10-year and FOREX pairs can confirm the direction of the DXY. The DXY is a wrecking ball on global markets. As it charges up, everything comes charging down. When we put on the CTKS indicator for the US 2-year yield, what do we see? Unfortunately, a cluster of SLs below. That means the 2-year is being supported. If we see continued DXY strength, we could see the US 2-year hit this structural smart money sell level at 5.0619. The CTKS method is for professional traders and investors. Professionals think completely differently than do retail. For example, three-dimensional risk management is a professional trading and investing technique. We know we control the trade or investment, but the market controls the return. And the market can go in waves. It can move down in an uptrend and up in a downtrend. We must be prepared for that. Rule 240, CTKS structure first. This means we need to know where the institutions, the algorithms are buying and selling. That is what the CTKS structure gives us. We know that CTKS structure, which comes from the CTKS method, is very straightforward. If price doesn't rebound from a structural buy level, for example, right back on the 12th of September at 1919.28, we saw that gold couldn't get above this structural buy level. What did that mean? Of course, it was going down to the next SL. And when you get clustered SLs, this is why CTKS structure is first, because it will capture price action. If you've ever been confused why a chart is not doing what it's supposed to be doing, it's because of CTKS structure. Gold currently is 1911.74, and you can see there's numerous smart money buy levels below the current price. That's very good for gold. Edwin from Twitter said, build an edge and take advantage of the service. I can't emphasize more how the service makes my trades so much easier. If you feel why your support and resistance gets violated most of the time, give yourself a chance and explore the CTKS method service. Thank you, Edwin. The purpose of the service is to give you the structural buy and sell levels through a TradingView indicator for the Tier 1, Tier 2, and Tier 3 charts. Please note, if you're a current member of the service, prices will not go up. But if you're not a member, prices are going up shortly for the CTKS method service. Let's have a look at the stock market, and we can see tech got hit in the last trading session. We know that CTKS structure overrides, so when we pop on the CTKS indicator, what do we see? Apple was rejected by a cluster of smart money sell levels around that 178.19 mark. But what do we know? If it's not going above, where's it going? It's going to the one below. Where was that? 175.27. Apple closed out at 176.31. Many people have said that trading without the CTKS method indicator is like flying blind. When we look at Microsoft's price action, we saw that the smart money buy institutional level of 334.77 was violated. If it can't go above, where's it going? Spot on. It's so simple. It's going below, and where was that? 332.85. If it can't get above, where's it going? It's going below. That structural smart money buy area is 331.87, and we can see there's a lower one there as well. These clustering of SLs make price stronger. The probability of a technical bounce up is getting greater. NVIDIA has been doing very well, and when we put on the smart money indicator, what do we see? There's a smart money sell level at 454.93, and this is formed by marking up the chart since 1999. This is not recent indicative price. If NVIDIA can't get above this level, it's headed towards 426.23. Turning to Tesla, Tesla had a smart money sell level at 277.46. It tried to find support at 273.62, but it couldn't. What did that mean? If it can't get above, where's it going? Correct, it's going below. The next smart money buy area on Tesla is 266.23, and this is Tesla's price action marked up with the standard certification process level 1 and level 2 since 2010. If you're only inside the crypto market, it's vitally important that you keep your eye on the TXY, the US 2-year, the US 10-year, the changes in the federal funds rate, the SPX, the Nasdaq, and especially the FOREX pairs. Why? Because all markets are intercorrelated and interdependent. We've seen Bitcoin slightly come up. It's up 0.57% to 25,951. We can see there's not much movement in the top 9 cryptos. The greatest gainers in the past 24 hours: TON, Comp, VET, Bitcoin Cash, BSV, Maker, Arbitrum, Tron, and IOTA. The greatest losers, top 100 past 24 hours: ASTR, Stellar, ICM, Curve, Nexo, TWT, SUI, NFT, and Immutable X. In the past 24 hours, there's been 100.73 million in total liquidations, 61.68 million of which are short liquidations. This has pushed the crypto market up. The crypto market is currently experiencing fear with a crypto greed and fear index of 41. Professionals know Rule 603, synchronization profits. This means the professionals understand where the Tier 1, Tier 2, and Tier 3 charts, smart money buy and sell levels are. They then use that to cross-triangulate the things that they trade and invest in. We know that no alt can escape Bitcoin's gravity, and we can see when Bitcoin came down, the alts came down with it. This is a very important thing to understand. The alts, because they have lower market capitalization, will overextend Bitcoin's either upward or downward movements. It's vitally important to know where smart money is buying and selling. But why is that? If you know where smart money is buying and selling, you can figure out where the algorithms are going to take you next. When we look at price action back here, you can see that the entire total crypto market capitalization did a big dive through, but it got caught by a variety of smart money buy levels. These safety nets are incredibly important to understand, but what we know, if it's not going above, where's it going? It's going below. And if it can't get above here, where's it going? It's going below as well. Price is always moving SL to SL, and we can see that we've had a major recovery inside the crypto market, but these smart money resistance levels are still playing out. We're not out of the woods yet. Retail trading and investing is completely different to professional trading and investing. Retail thinks that there's only one level of support and one level of resistance. This couldn't be more incorrect. After being inside financial markets for nearly 4 decades, the thing to learn is that there are multiple ceilings and multiple safety nets that play out on price structure. Your job as a professional is to seek to know where the smart money levels are, and when we look at Bitcoin, we can see that there was a smart money support level as price was coming down at 25,367. It couldn't get held by this safety net because it dropped so fast, so hard, but it got caught. Where? At the secondary safety net, which was at 25,086. When we passed through that safety net that didn't hold us, where were we on our way to? Up to these structural ceilings, and you can see they've acted as ceilings each time. This is why the CTKS method with these Standfield levels, these SLs, helps you to predict where price is going. And it's a very simple rule. Price is moving SL to SL. And here Bitcoin has been marked up with the CTKS method since 2009. We can see that Bitcoin is under resistance. What is actually causing this resistance? It's the main markets, especially the DXY. All eyes have been on Solana. That makes it incredibly important to know where smart money is buying and selling. Let's throw on the indicator. And what do we see? Solana has a smart money resistance level at 1847. And you can see that smart money resistance level has held so many different times. What a beautiful spike that was. Where's another support level? It's at 1812. We know the price is always moving SL to SL. If it can't get above, it's going below. If it can't get above, it's going below. But if it doesn't make it all the way down to this smart money buy area at 1703, that's fantastic. That's what we want. And this particular area is called positive air. Positive air is where the buyers step in to support price. Solana is an exceptionally good project, and Visa has been partnering with Solana. Visa did a deep dive on Solana, a high-performance blockchain network. There were some really good points to take out of Visa's analysis. Bitcoin and Ethereum are the two dominant cryptos in the crypto market. Bitcoin manages around 7 transactions per second. Ethereum is much better at 12 transactions per second. Solana blows away both with 2,000 user-generated transactions per second during periods of peak demand. More importantly, when peak demand hits, Solana's transaction fees are a flat line. They're this line here, whereas Bitcoin and Ethereum's transaction fees tend to go through the roof. And I would suggest they're being very generous with these transaction fees. That is, often Ethereum fees are hundreds and hundreds of dollars, and there was a Bitcoin transaction fee in excess of $500,000 just recently. Solana is also blindingly fast. It's much faster than other comparable projects. Professional traders and investors look for a lot of things, but the first thing they look for is CTKS structure. Professionals must know where the structure is, and SLs have different weights or different thicknesses. And when we pop on the indicator, we can see, unfortunately, Ethereum is coming into some very heavy SLs. This means that it could be hard for Ethereum to get over this particular resistance. When we look at Bitcoin Cash, where are the resistance levels and the support levels? Where are the safety nets and ceilings? From an institutional perspective, not a retail one. Retail relies on recent indicative price, which RIPs your money. Let's pop on the indicator from the service. What we can see is that there are multiple levels of smart money sell resistance from 204.70 up to 206.90. Bitcoin Cash is an incredibly powerful project, and you can see if we don't come up, we typically retest before we can push through, and this is generally a short liquidation causing these institutional spikes. If you would like to get these Tier 1, Tier 2 and Tier 3 indicators for TradingView, as well as a video on each specific one with 3-dimensional risk management for the coming month, you can join as a foundation member, ctksmethod.org, but please note prices are going up very soon. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.